Why would Warren Buffett, one of the greatest investors of all time, put over $1.5 billion dollars into a company that's been struggling? Today, we'll look at Berkshire Hathaway's surprising move into UnitedHealth, why he bought, what's happening with the stock, and what it means for investors like us. Welcome to the channel. Before we dive in, a quick update on my portfolio. Right now it's at 13,800 and I am still consistently beating the S&P 500. It's a great reminder that patience, research, and smart decisions really pay off over time. Now, let's see why Buffett decided to buy United Health and why it matters for investors. Buffett revealed that Berkshire Hathaway bought over 5 million shares of UnitedHealth, worth about $1.57 billion, but the stock had been falling fast, losing almost half its value in just a few months. Why did this happen? Well, medical costs were going up as people rushed to catch up on treatments and surgeries after the pandemic. At the same time, ongoing investigations by the Department of Justice created uncertainty. The CEO suddenly resigned, raising questions about leadership and stability. And in general, healthcare stocks were underperforming the market, which added even more fear. Even though the fundamentals were strong, all this worry pushed the stock down, and that's exactly where Buffett saw an opportunity. So, why did he decide to invest? First, UnitedHealth is an industry leader. It's the largest health insurer in the US, and with its Optum division, it also provides medical services and pharmacy benefits. This makes it a very diversified business. Second, the fundamentals are solid. Revenues are still growing, and the company holds a dominant market share. Third, this move gives Buffett exposure to healthcare, a sector where he didn't have much. It's a stable, essential industry, exactly the kind of business he likes. And the price was very attractive. United Health was trading at a P/E ratio well below its 5-year average and cheaper than the S&P 500. It also pays a dividend of about 3% annually, which Buffett loves because it's a steady source of cash. Buying a market leader at a discount, that's what he calls a bargain opportunity. He kept the purchase quiet at first to avoid speculation. When the news finally came out, the stock jumped, the famous Buffett bounce. When a company rises simply because he invests, this move really shows his philosophy. Be fearful when others are greedy, and be greedy when others are fearful. So, what can we as everyday investors learn from this? First, look for strong companies going through temporary problems. Second, don't follow the crowd. Buy when others are scared. Third, think long term, not short term. United Health might take months or even years to recover, but Buffett isn't looking for a quick win. He's thinking about where the company will be 10 or 20 years from now. In short, Buffett bought United Health because it's a market leader, financially strong, trading at a discount, and in an important industry. His move reminds us that patience and long-term thinking are the real keys to building wealth. What do you think? Is United Health a good opportunity or did Buffett make a mistake? Tell me in the comments. Subscribe and hit the bell for more videos. Thanks for watching.